For quite a few years, the Accounting for Sustainability project has focused on the area of corporate reporting. One of the key things that we've done over the years is to develop a concept called integrated reporting, which is really looking at how an organisation's strategy, its governance, the information about the context within which it's operating really link to performance and future success. The key thing that A4S has done in this context is to establish something called the International Integrated Reporting Council.
With the help of my Accounting for Sustainability project, we held a roundtable discussion that brought together the global leaders from the financial reporting, investment and business community. The aim was to agree that a transformation in corporate reporting was essential to understand and communicate the value of companies in the 21st century, and for me, ultimately, the value of nature's services which underpin our own economy.
4 years ago, nobody had really heard of integrated reporting. Today, we have a framework, and I think it is becoming the norm across the world. And that has been achieved with really great support from the Prince of Wales. Very, very important element to why we've achieved that success. Usual to say that accountants don't embrace change very quickly, but in today's world that is absolutely critical. The world is changing very dramatically, and for organisations to be able to tell their whole story about value creation and preservation, it's really important that they adopt integrated reporting which allows that to be achieved.
Well, the sustainability challenges that business and governments face over the next 10 years are significant. Integrated reporting as such is a tool, but reporting does influence behaviour. And there is no question that the whole concept of integrated reporting around value creation over time is something that can make a significant contribution.
We're not valuing natural capital. We're not valuing properly or accounting for the immense services provided by nature herself, whether it's through water or soil or forests. All these things we just take for granted. And because they all seem to go on forever and ever, we've just gone on exploiting them, imagining they just go on into the distance ad infinitum. And there's never any end. But now we've reached a stage where we really are threatening the entire basis on which our human activities are founded.
Pioneers like Puma have inspired a growing number of companies to try and account for their dependence and impact on natural capital. A major barrier to adoption is a lack of a common approach, preventing comparison across businesses and making reporting on performance a real challenge. For this reason, A4S helped to establish the Natural Capital Coalition, which is now in its first year of developing a globally accepted protocol for the valuation of natural capital. Many CFOs and members of our accounting bodies network are contributing to its development.
There is one thing which is missing today, and this thing is about having a common measure, common method, common rules for everyone. And having CFOs grouping together, I hope, can help define common standards which are going to be then exchanged with the authorities, the regulators, the accounting bodies, and then become a norm.